Welcome to lesson 3 of the 1% playbook. We're going to be diving into market structure today. I want to really ingrain this into you guys' head. We're going to go over our top-down analysis is what it's called. You're going to do this every single week. You're going to identify each time frame in the market. We're going to identify the weekly, the daily, and the 4-hour. Our top 3 and strongest time frames, okay? So I want to start out with just talking about which ways the market moves. The market moves in 3 ways. It moves up, it moves down, and it moves sideways. Okay? So, ways, type in right here, ways the market moves. Moves up, down, and sideways. So if the market's moving up, we call that an uptrend. If the market's moving down, we call that a downtrend. And if the market's moving sideways, we call this a ranging market. So let me draw these out for you, okay? So we've got our uptrend. I'm gonna make this blue. We've got our uptrend here. I'm gonna put bullish. Uptrend. Then we have our bearish downtrend. Make this red. And then we've got our ranging market. So it's just a market that's literally just going sideways, which typically means indecision in the market. So buyers and sellers are not deciding and can't decide if they're going to go up or if they're going to go down. So this is also called consolidation, which is consolidating, ranging. So we'll put our ranging market here. Okay, so these are the 3 ways that the market can move. You either have a bullish uptrend, a bearish downtrend, or the market's moving sideways. We want to trade whenever there is a clean bullish uptrend or when there's a clean bullish downtrend. We don't want to trade a ranging market. It's very unpredictable, and you don't catch the moves that you would in a bullish uptrend. For example, see here. If I were to put on a long position down here, I'm able to catch a much bigger move than putting in a long position down here. See what I mean? And it's a lot easier to get taken out because the market's so choppy. It's very up and down, very quick. There's no decision. There's a lot of indecision in the market. And then the same way with the bearish downtrend, we can catch these bigger moves. Rather than these little moves here. See what I mean? So we want to catch a minimum of a 1 to 2. I always love aiming for a 1 to 2. It keeps me very profitable, and I can typically always hit a 1 to 2. A very conservative approach to the market. You've got a very healthy stop loss, a healthy take profit, and you're always winning more than you're losing. So here's your 3 ways that the market moves. And we only want to trade, only trade bullish uptrends and uptrends and bearish downtrends. Okay? Yeah, let's go ahead and screenshot this here. Okay, so now I want to go over identifying the market. Okay? So let's practice some right here. I'm going to bring our bearish downtrend. Actually, let's just make new ones. So let's say we have market that looks like this. Okay. So if we were going to identify this market, the first thing that we're going to look for are our lower lows, our lower highs, our higher highs, and our higher lows, depending on if we are bullish. Okay. So right here, let's say that we are starting out this market bullish. Okay. So if we are bullish, we're going to be using higher highs and higher lows. So if bullish, we are using higher highs and higher lows. So a little line here. Okay, so right here we've got our higher low, and here we've got our higher high. Okay, so the market goes up, it shifts. We are looking if price breaks either below this higher low or above this higher high. So market price is coming up, coming up, coming up. It has not broken above or below, so we are still bullish. Now, what happens if we break above? We get a new higher high. This turns into our new higher low. So now we're looking for price to either break this higher high and this higher low. If we break below this higher low, the market shifts bearish, and we'll be looking for sells. But let's continue seeing what price is doing. So nope. Did this break above right here? Nope. Came back down. Nope. I just consider this market structure. If it hasn't broken above or hasn't broken below, we just consider that market structure. We broke above here. So what is this? What happens here? This becomes our new higher high. And this becomes our new higher low. Same thing. Oop, this elbow market structure. Oh, broke above. This becomes our new higher high. This becomes our new higher, low. Same thing, broke above. This becomes our new higher high. And this becomes our new higher low. So higher highs and higher lows are the elbows. We're looking at the elbows in each time frame. Now, what happened here? We shifted below this higher low. Now, even though it looks like we're going up, this could anticipate that price is reversing. And now we're going to start going to the downside. Now price has shifted this and turned this to a lower low. Down here, this has turned now into a lower high. Because if we're bearish, we are using lower highs and lower lows. Okay, so now we're bearish. Now, as we're going to the downside, we're going to be looking for our new lower highs and our new lower lows. New lower highs, new lower lows. Okay, I want to make sure that this makes sense because when identifying the market, it is crucial that we know the trend because we want to trade with the trend. Always trade with the trend. If the trend's bearish, we want to sell the market. If the trend's bullish, we want to buy the market. Okay, so I'm going to draw a chart here that just shows all the elbows of a chart. We're going to identify each elbow. Okay, so we've got our higher low and our higher high. We've got a new higher low, shift above, creates a new higher high. We come down here, retest this previous structure point, break above, giving us a new higher high. And shifts this elbow below, gives us a new higher low. Same thing here, retest this previous structure point, break above this higher high, and that gives us a new higher high and a new higher low. And same thing happens one more time until this market reverses, higher high, and then a new higher low, and then price shifts bearish because we've been shifting above these previous structure points, shift above, shift above, shift above, shift above, shift above, and now we've shifted below the higher low, now turning the market bearish. So now we've got a lower low, and this shifts into a lower high. Retest this previous structure point. This now becomes our new lower high. And this now becomes our new lower low. And same thing, retest the structure point. We get a new lower low. Makes this structure point the new lower high. Same thing, retest the structure point, breaks below, we get a new lower low and a new lower high. And then it happens one more time. This is our potential new lower low. We haven't had an elbow yet. Since we break below, we'll just say that we close down here. This now becomes our new lower high, our new lower low. Okay, so does this make sense? We've got our higher low, higher high, higher low, new higher high, lower higher low, new higher high, new higher low, new higher high, new higher low, new lower high, new lower low, shifting the market now bearish, new lower high, new lower low, new lower high, new lower low, lower high, new lower low, lower high, new lower low. Okay? So that's how you identify the market. That's how you identify if it's bullish. It's bullish, it's bullish, it's bullish, it's bullish, 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 bullish. Then we shift below the higher low, now shifting the market bearish. Now we're looking for sells. We were looking for buys, now we're looking for sells. And what our goal is are to catch, if it's bullish, these moves to the upside here. I've put my stop loss below the previous structure point so that if price does come down and take me out, I'm completely wrong about the direction of the trade. I've got my take profit right here to 1 to 2 risk to reward. And then same thing for shorting the market or selling the market. Same thing. Right there, I got my 1 to 2. And we are now selling because we are in a bearish market. Does that make sense? So we are selling when the market goes down and we're buying when the market goes up. It's that simple. So now I'm going to teach you guys how to do a top-down analysis, okay? So our weekly time frame, which is right here, we are going to look and see and identify the market if it is bearish or bullish, okay? So let's see. Weekly. Okay, so our weekly is bearish. I can identify that right away because we've got our lower high here and our lowest lower low here. Anything in between now is considered market structure. Okay, so we are bearish on the weekly. We were bullish when we broke above this previous structure point here. Bullish, bullish, broke below, now shifting the market bearish, shifted the market bullish again. Here was our higher high, our higher low, shifted below, and shifted below again, now shifting the market bearish, creating a new lower high and a new lower low. Okay? So we were looking for sells in between this lower high and this lower low. So the weekly is bearish, okay? We want at least 2 time frames in sync. Either the weekly and the daily and the 4 hour, the 4 hour and the weekly. We need 2 of them to be in sync to give us a good high probability setup. Now, to get the best high probability setup, you want all 3 in sync, but a minimum of 2 time frames in sync. Let's go on to the daily here. It's our weekly. Here we go. So now we're in the daily time frame. Daily. And I can identify this right away. We are bullish in the daily. So we were bearish, lower low, lower high, excuse me, lower low, high, lower low. And then this is all market structure here. We had our lower low here, lower high here. This was all market structure, market structure, market structure, because we haven't broken above, and then we broke above. Now the new elbow was here, and the previous elbow being here, now making this our higher high, making this our higher low. So now we're bullish, and we have not broken above yet, or we have not broken above this or below this higher low. So we are bullish in the daily. I hope this is making sense. Bullish in the daily. We're just identifying the time frames. We are finding out if we want to buy or sell this market. So right now, we're at a 50-50. We've got the weekly bearish and the daily bullish. The 4-hour is bearish. This is just a trade. I've got my risk and my take profit here. This is one that I'm looking at this week to take. We're looking just at a pullback into this area of interest, get our entry signal, and then sell, because our weekly's bearish and our 4 hours bearish. So I'm going to be selling this market. So let's go to 4-hour is bearish, and I'll explain why. It's bearish. I guess I'm going to start here just because you can clearly see that this is bullish. If we were to do a bar replay, okay. So we were bullish here at this structure point. We had our higher low and our higher high. Price did its thing for a little bit. We then broke above that higher high. So now this became a higher high. And this became our higher low, since we broke above the previous higher high. And then we broke below. So this now became our lower high, since we broke below the higher low. And that now became our lower high. No, our lower low, excuse me. Lower low. This became our lower high. And then we broke back above the lower high, now turning the market bullish again. Got a higher high. This now shifts to our higher low. Then we shifted back bearish. Then we get a new lower low. This becomes our lower high. Then we shifted bearish again, and then even more bearish now. And since we're bearish in the 4-hour, I'm waiting for a retest of this area of interest to then take sells to the downside. So get out of bar replay. So when this shifted bearish, 4-hour then became bearish. And then I was looking for sells. The weekly's bearish and the 4 hours bearish. Remember, I need at least 2 time frames in sync. Need at least 2 of the higher time frames in sync. But 3 gives you your highest probability of choosing the correct direction of the market. I say 2 or better, 2 or 3 time frames in sync, and you can take the trade. There is a lot more, of course, that goes into it, but at least we know, are we buying or selling in this market? We're going to be selling, of course. So last week I could have taken this trade right here. We were bearish, and I actually did take this trade last week. I actually caught a 1. What did I get? Was it a 1 to 2? Caught a 1 to 2. So something just about like this right here last week. Now I'm actually waiting for a pullback this week into this area, and I'm going to take the trade again because I love this setup. I love Euro USD. I also love Euro CHF this week because look at this. We've got a head and shoulders pattern here on Euro CHF. Shoulder, our head, creating that neckline. We've already broke the structure. Now we're just retesting it. And look at this. We had this previous daily rejection candlestick. And now we are rejecting this area of interest again today. So very interested in this trade too. And of course, you can see we are bearish, so we want to be selling. We were bullish, but our head and shoulders is a reversal pattern, so we want to be selling this market. Okay. So back to Euro USD. So we've got our bearish, our weekly bearish, our daily bullish, and our 4-hour bearish. So we are going to be selling this market. Okay, so that's our top-down analysis as far as your higher time frames. Now, your lower time frames, your 2-hour, your 1 hour, your 30-minute, that's for your entry signals. Okay, so we've got our weekly, daily, and 4-hour. These are our higher time frames and the time frames that tell us the direction of the market. At least 2 time frames in sync for you to know if we are buying or selling. Either 2 time frames, either 2 or 3, or 3 time frames that are bearish, or 2 or 3 time frames that are bullish. Okay, I know it's a lot, but you guys can practice this and just go through the market and just identify your higher highs, your higher lows, your lower highs, your lower lows, and identify when the market shifts, when the market goes from bearish to bullish or bullish to bearish. So now that we know our higher time frames, that's the first step in our top-down analysis. We know that we're going to be selling the market because the overall time frames are bearish. And when the market does shift from bullish to bearish, we call that a shift of structure. So SOS is a shift of structure. And this happens when price shifts from bearish to bullish or bullish to bearish. Call that a shift of structure. So if we're going to put everything together, so we identified the trend. That's number one. And then, so we found out our weekly was bearish, our daily was bullish, and our 4-hour was bearish. And then we aligned our higher time frames. So we aligned them, and the total outcome was bearish. That means we are selling. Oh, I spelled that wrong. Bearish. That means we're selling the market. So it's as simple as that. You're identifying the time frame, the weekly, the daily, the 4-hour, only 3 time frames, identifying the trend, and then number 2, we align the higher time frames, which our overall outcome was bearish. And now you guys know how to look at market structure, find your lower highs, your lower lows, your higher highs, and your higher lows, and identifying the market, truly identifying the market to know if you need to buy or to sell. So your probability just got a whole lot higher. So I challenge each of you to find a pair, whether that's Euro USD, GBP NZD, gold, Euro NZD, one pair, and practice, repetition. I want you guys to be able to look at the market and just automatically tell, okay, that's bearish. Okay, that's bullish. Okay, that's bullish. Or that's bearish. I want you guys to be and to master the skill of the market trend. Once you know the trend, the game changes. Now you know you're buying or selling. Does that make sense? I hope so. That's pretty much it as far as market structure. You guys can copy these notes down. I hope you guys are liking this. I hope I'm not just boring you guys, but this is this is the facts. These are the facts. This is what's going to make you profitable when you are practicing these market structure techniques. You're going to find the trend of the market, and that's where you want to trade. That's how you're going to make money, is trading with the trend. Okay? Because we want to catch these moves from the big guys liquidating money from and into the markets. We want to catch their buys and their sells, right? So I hope you guys have liked this. We're going to be diving into lesson 4 here, so y'all get ready.